President and CIO of EGSI Financial. Ed, great to have you here today.
Thanks for having me.
Well, first and foremost, the core PCE price index, which the Fed Reserve uses to gauge underlying price pressures, rose 0.2% in April from March, following the 0.3% increase in the prior month. So first and foremost, what is your take on that economic data release?
You know what? It's really not surprising. I think the Feds are looking at it as a little bit of relief and maybe giving them the ability to still look at lowering rates. But the reality is inflation is here. It's not going away anytime soon. We continue to overspend, but the market has already priced in, a couple rate decreases. So I think, because the election year, the timing towards the August, September timeframe, I think we could see them lower rates by, 25 basis points. I disagree with it, but I think that's probably what's going to happen.
And Ed, Federal Reserve rate expectations continue to be in focus, but do you think the central bank's real issue is not just inflation?
Yeah, I think they're so focused, they're just one dimensional. It's all on inflation, and they've been getting it wrong all along. But I think really we have to look at stagflation. They keep revising the employment numbers downwards. The economy is slowing, and inflation is here to stay. And by definition, that's textbook stagflation. And when you look at the definition of what a recession is, from Powell's own definition during an interview in 2022, I mean, we're in a recession right now. And Main Street, there's a big discrepancy between Main Street and Wall Street. We keep talking about, inflation is coming down, it's steady, but people are spending 30% more at the grocery store than they were just a couple of years ago. So it's really hitting home for Main Street, and I think they're really feeling it.
And I think you bring up a key point there because if we look at the economic data, aside from the primary data releases, as you mentioned, credit card delinquencies
Mhm.
as well, we're seeing how inflation is affecting Main Street and the American consumer. But investors have a lot to keep their eyes on as we head into the summer months. So what is your
They do.
assessment of the current landscape and where we go from here across other asset classes?
So now is the time there's going to be some good buys, some good bargains out there. For us, we're kind of in a holding pattern, to see really what's happening. I still like industrials. I'm still a big fan of hard assets, gold and silver, commodities, including oil. But there's going to be some good buys out there. I'm just not a fan right now of getting into the market until we find some really good deals.
And as we head into the rest of the week, Ed, of course, we're all paying attention to the jobs report at the end of this week. But in addition to that, we do have the ECB on Thursday meeting, and they are
Right.
expected to cut, but we will have to see what happens. So what's on your radar as we head into the new trading week?
I don't think they're going to cut rates. I think they're going to be they're going to hold steady. They're just going to maintain it through the summer. We're going to continue to see volatility in the market up and down, as the new economic data comes out. We're going to continue to see jobs numbers, in line with what they have been. And then we're also going to continue to see them revise those jobs numbers downward. So we have to be reverse looking to kind of get the real data because it seems to be inflated and has been for over a year. So, I think that's why when these numbers come out, the market isn't as quick to react as it has been in the past because it's seen the revision of the data downwards. So we're going to continue to see volatility, all the way through the summer, probably all the way up until August, September.
Yeah, and it'll be interesting to see whether the European Central Bank does move with a cut or not on Thursday. We'll have to wait and see. Without a crystal ball, we don't know what's going to happen. But given that
Right.
OPEC has been meeting as well, what do you expect to see out of that meeting? And of course, Americans are paying attention to the price of gas as we head into the summer driving months. So what are you keeping your eyes on when it comes to commodities?
When we're looking at the price of oil, when OPEC comes out, whether they raise prices, if they do, it's going to be minimal at best. I think it's going to be insignificant, to be honest with you. The what concerns me more than anything right now is the release of more oil from our strategic oil reserve. Until we really start producing oil here in the U.S., we're going to continue to see inflated prices. And that's right now. We're hitting into the summer months, the driving season. We're going to see a little bit more demand, and so I do like oil going forward, at least through the summer months. I think that that's really going to be a great option and opportunity.
Well, Ed, thank you so much for joining me on this Monday morning, and thank you for all of your insight.
Absolutely, thank you for having me.